Welcome, everyone. We've been looking at these markets now for over a quarter century, and I've got to say that this year marks probably the most complex and confusing in terms of different signals that the market is showing us, both politically and economically, and from a business opportunity standpoint. And that those contradictory messages are going to reveal themselves as we go through our presentation, because on a macro level, there's certainly a lot of concerning trends. But as each of our industry practice leaders reveal some of the opportunities that they're seeing in the region, you'll also see tremendous opportunities for growth and investment. So as we all know, and as you're reading the headlines right now, there is plenty of political strife at the moment in Latin America. You've had riots in Ecuador over the end of 40 years of fuel subsidies that were costing the country $1.3 billion a year. You have political strife in Chile that began with the raising of some public transportation fees that were met by protests that were then countered by very heavy-handed policing that then really lit a match under a fire of protest. So we ask ourselves, we also have the return of populists, most like in Argentina. We have a populist in power in both Mexico and a different type of populist in Brazil. So you might ask yourself, why does the region why are voters so angry? And on the next slide, you'll see one of the reasons why. As tempting as it is for us to look at a region as diverse as Latin America and try to find patterns politically, that's a dangerous move. A lot of people, when Bolsonaro was rising in his campaign polls, said, "Oh, this is a result of Brexit and of Trump." Well, I can tell you, and Brazilians will tell you, that Bolsonaro's rise has nothing to do with Trump nor with Brexit. Nor does, frankly, what goes on in Brazil have any influence in Chile, nor does what happens in Chile have any influence in Colombia, and vice versa. The point is that politically, Latin Americans vote on local issues. Politics is local in Latin America as much as it is anywhere else around the world. However, there are economic trends that hit the region as a whole. The region is, and has always been, reliant upon the export of natural resources as the main source of foreign capital. And not just the export monies that are earned, but also a lot of the foreign direct investment that goes into the region is in pursuit of natural resources. Over the last 5 years, Latin America's economy has actually shrunk and has not grown at all in dollars. Now, we've seen positive growth in the last 3 years, but that is being coupled by devaluations of major currencies in the region. So as a result, the individual, the consumer, the voter, knows that his acquisition power is not advancing at all. And when we go to the polls, and we have not seen our own economic situation improve over the last 4 or 5 years, whatever the political cycle, then chances are we're going to vote for change. So there's no surprise here that people are upset in Latin America. On to the next slide. Latin America, in fact, since 2014, has been underperforming even much more mature economies where expectations are much lower about growth, and will continue to underperform versus emerging markets over the next several years. And the reason we can begin to understand on the next slide. This is a very complex graph that was put together by McKinsey. And along the top, you see the growth levels, the average annual growth levels of different regions from 2000 to 2015. Latin America figured more or less around the middle of that, at the bottom end of the range of emerging markets. At the very bottom, you see the actual advance of GDP per capita, and you see that Latin America scored worst along with Western Europe in terms of year-on-year advancement. And that's the number that politicians should worry about, because that's the number that translates into how people are feeling about their economic advancement. Now, the blue versus the orange explains, where did growth come from? Blue tells us that what percentage of growth came from the expansion of the labor pool, and orange from the advancements of productivity. So GDP is a very simple formula. It's the number of people working multiplied by how much stuff they produce, how much value they produce. And the fact is that in Latin America's growth has been driven by an increasing labor force. Why? Because of population growth, particularly more people entering, children entering adulthood, and also relatively small numbers of people retiring. But that is about to change, as we're going to see on the next slide, because Latin America is actually the fastest aging population of any region in the world. The average household in Latin America has gone from 4 kids to 2 kids in a matter of 30 years. The same trend took 60 years to transpire in the United States and Western Europe, for example. And Latin America still continues to lose citizens to emigration. There are countries in Latin America that capture immigrants, Argentina, the Dominican Republic, Chile, etc. But as a region as a whole, more people are still leaving Latin America than entering. And so what you will see is, as early as 5 years from now in some of the older countries like Argentina and Uruguay, you will see that demographic dividend of having relatively few children and relatively few elderly turn into a demographic liability as more and more people enter over the age of 60 and begin to draw upon pensions rather than contributing to them. Other countries like Mexico and Brazil will enter this phase in about 15 years, and then the youngest populations in Latin America, Central America, it will be another 25 years. In the meantime, those countries actually benefit demographically, but in the long term, this is a real concern. Okay, let's move on. Now let's look at some of the global trends that are impacting Latin America. The first one is this notion of hyper-transparency. The fact is that corruption and poor governance has been an issue in Latin America for a long, long time. But now, thanks to the fact that there's 200 million smartphones in Latin America and people are able to self-publish any conversation that they record, including questionable conversations amongst politicians, and can publish them into social media that's reaches millions of people across Latin America, has become a real liability to the political class in Latin America. And they still have not adequately adjusted their ways of doing things. So you have both a hyper-transparency, but also you're starting to see the kinds of manipulation, political manipulation of social media that we've seen in the US and other markets now happening in Latin America. We saw this in the Brazilian elections. There's no doubt that this was there was some dark hands behind what went on in Ecuador. And so you also have sort of leaderless protests that can suddenly get a lot of critical mass behind them, like what has happened in Chile, very quickly, much faster than the government can react to. And the government doesn't even know with whom to negotiate, because these movements are social media driven. So this creates a whole bunch of uncertainty for voters and investors. It tends to weaken institutions. We've seen a decline in the support for democracy. If you follow the Latino Barometer survey over the last several years, there's been a gradual descent in the support of democracy. We see a return of caudillo-style politics, where voters, out of desperation, look for somebody with a strong voice and a single purpose to get them out of trouble. And we see the trend of populist campaigning that has always been around Latin America now transcending into populist policies. That's worrisome. The rule before was, okay, you have to say populist things in the campaign, but once you get into power, you have to be a pragmatist. Well, that unfortunately seems to be weakening over time. On to the next trend. We have a global economy where there's a great degree of uncertainty. Some of that is inspired by the inconsistencies and somewhat radical positions taken by President Donald Trump, which has gotten the US into a tit for tat with China, where as much as $700 billion of the global economy is at risk because of tariff increases that are on the table today. That alone could lessen global growth by almost a full percentage point next year. In this age of uncertainty, money tends to escape to or go to safe havens, including US Treasury bills and US equities. such that the US dollar is artificially strong right now. That tends to be bad for commodity exporters, both because it drives down the price of commodities, but also because commodity exporters like Brazil, Chile, Argentina, Colombia, Peru, etc., they rely a lot on imported products. And so the economy in general, the consumption side of the economy tends to do poorly when the US dollar is strong. On the other hand, Central America, Mexico, and the Caribbean tend to do relatively well when the US dollar is strong because they export goods that are more price sensitive. Also, a small but important factor is with elevated gold prices, which is another safe haven. You're seeing record investment in gold mining right now across Latin America. If you want to understand what is driving global growth, a lot of attention is still paid to Europe, but frankly, Europe does not contribute much to global growth. Next year, global growth, about 2/3 of it will come from three countries: China, the US, and India. The other 35 to 40% will come from the remaining 199 countries around the world. So to understand what's going to happen to the global economy, we really have to focus our sights on those three countries. On to the next. Last but not least, as we all know, many of the Latin American currencies, particularly in South America, but also to some degree Mexico and certainly Trinidad, rely upon the export prices and volumes of certain commodities. And as commodity prices go down, there's a strong correlation with major Latin American currencies, as you can see now. We are in an age of relatively low commodity prices versus where we were in those years of abundance from 2003 to 2013, also known as the commodity super cycle, when Latin America did so well. And there's a lot of reasons, that's a separate webinar altogether, as to why those commodity prices are not coming back anytime soon. Okay, let's move on. Now, in spite of what appears to be a difficult period of time in which Latin America finds itself, we nonetheless surveyed a number of divisional presidents of multinationals that operate in Latin America. We did this survey in September, soon after the by-election in Argentina that showed that the Peronists were likely to come back to power. And the results were surprisingly positive. First of all, on the next slide, we'll see that in 2019, in dollarized growth, in spite of weakening of currencies in several countries, their divisions have averaged close to 9% growth this year, which is pretty amazing considering the region as a whole has grown about 1.5%. And when we asked them about next year, on the next slide, they told us that they were expecting somewhat better to about the same results as this year. If we were to poll them again right now, they might feel a little differently, but the point being that when we got into conversations with these companies about what is driving their growth, what they told us was that they themselves and the industries in which they operate have gone through a period of reckoning in Latin America, whereby they had to cut costs in their business units, and they've gotten ahead of a lot of the challenges in Latin America, and they now operate much leaner operations. A lot of them also look to disruption as a source of growth and opportunities. So some of the companies we interviewed were in fact disruptive new players in Latin America who are seeing tremendous growth. And I know some of my colleagues will touch upon that as we get into industry analysis. Okay, let's move on. When we ask people what's going to drive their business next year, on a positive sense, they pointed with roughly equal weighting to Brazil, Colombia, and Chile, less so to Mexico and Peru. And when we asked them about negative growth, they again gave above weight to Argentina, but also mentioned Mexico. And that's an interesting dichotomy in Mexico that we'll explore in a moment, how Mexico is both delivering positive growth to some companies and also a real source of concern to others. On the next slide, we then asked them about what is putting their business at risk next year. And if you look at some of the top responses there, it's currency depreciations, and we've talked about commodity prices and how that's impacting things. Local elections, of great concern, of course, is Argentina, but also Bolivia. We have municipal elections and departmental elections in Colombia at the end of this month. Weaker falling demand, that really is an offset of potential softening of the global economy. And so these are some of the concerns that very much echo the trends that we're seeing both globally and regionally.